They can't hear either of us? This wouldn't be a very
Yeah.
interesting conversation if they can't hear either of us.
Okay, let's see that. Oh, hold on. I think YouTube is messing things up. Huh.
Probably should have done a quick audio test.
Yeah, yeah.
Can
No,
you
we
guys
can.
all hear us?
Yeah. Okay, guys, can everybody hear us and see us? Because obviously we're having some slight technical issues with YouTube. So let's see whether. Oh, okay. So somebody's saying yes, yes, yes. Okay. So, interesting. Okay, I don't know what went out onto YouTube because at one point I was seeing the stream happening, and yet I'm not sure that went out. Thank you, YouTube. YouTube has got this live streaming thing slightly in beta. So what I signed up to do like a developers thing. Maybe I shouldn't have done that, but every so often they kind of mess things up for me. Yeah. So some people are saying, "Oh, I can hear now. Just came on. Good." Yeah. Okay. Great.
You missed a lot of
You
good
missed a
shit.
lot of good
Like, I
shit.
mean,
Yes.
you missed
Okay.
all the good stuff, all the secrets, all the
All the
Holy Grail
secret
shit
stuff.
was
Yeah,
earlier.
it was all
All
earlier.
I only
Yeah.
see I see 33 people in here, so
Yeah.
all of you that couldn't hear,
Yeah.
we're just getting warmed up for when we
Yeah,
do
exactly. We're just
broadcasts to
trying to.
thousands.
Yeah, exactly. We're just trying to see who really has that commitment and persistence to
Yeah,
stay.
no one wants to hear about trading micros and staying small. They want to
No,
hear about levered
exactly.
Bitcoin. We got to talk about levering Bitcoin.
Oh, somebody's saying my volume is much lower. Okay, let me. I mean,
Oh,
I don't really talk that loud, anyways. But let me see if I can rectify that.
she doesn't want to upstage the guest.
Yes, exactly. I'm very, very polite. I'm from
Yeah,
London.
yeah.
Okay, is that better, guys, now? 500 times leverage, please, somebody's saying.
Yeah.
1,000? What, just 500? Come on, why stop halfway? Okay, so we're going to have to redo some parts of this. So I've got Rod Casilli. I'm sorry, Rod. It's YouTube, man. It's like,
Yeah.
hopefully they're not going to cut us off now. But yeah, so apparently Rod is coming in a little bit hot. Let's kind of put that a little bit
Uh-oh.
down. It's
Jeez.
okay.
All right, hold
No,
on.
no, no, it's fine.
Now
It's fine. I've got
okay.
control. I've got
I'm,
control. I've
I'm
got the
screaming at you.
power. Yeah, yeah.
Ooh, now I'm full screen too.
Yeah, yeah. Look at that. Yeah.
Yeah.
Is that better, guys? I've turned Rod a little bit down. Okay. Rod sounds good.
All right, good.
This is live streaming, guys. It's live streaming. That's what happens. Okay, so we're gonna repeat some of that. So, Rod, you've been trading for a long time. So,
Yeah.
tell us a little bit about how long you've been trading for.
Yeah, so I started my trading career well over 25 years ago. Started out at Merrill Lynch and was actually trading the first E-mini in '97 when they launched the S&P E-mini. And I've been a professional full-time trader, earning the vast majority of my income from trading since about 2007. So for the first 10 years or so, I had full-time jobs and other things. So that's a little
Yeah, so
background there.
so that's one thing to take from this, that consistency really takes quite a long time. So whoever comes to me and is complaining that they've been at it for 6 months, I'm still not profitable, it's like, it takes time. Okay, it's for some people it takes 15, 20 years, but you have to keep working at it. It won't just happen. Okay.
Right. Yeah.
Okay, so let's talk about some of the ways that you enter into your trades, because this is supposed to be like a price action workshop. We're not going to be doing
Okay.
charts or anything, it's just more of a conversation. But I think people would like to know what your approach is when it comes to actually entering trades. That seems to be like a huge pain point for people. Now, I use time-based candles around particular levels, and I know you use them as well. But tell us about Renko charts. I think that's your jam.
Yeah. So the first thing that we were also touching on, and we can touch on it again, is that most of my training and education now is focused on helping traders pass these online futures funding programs, which I'm sure many of you are familiar with. And the first thing to understand about the methodology that I teach, and the reason we enter at these particular places is because everyone is trading these accounts too large, right? So the notional value, in other words, you pay your $200 and they give you a $100,000 demo account and they say make 6,000 in profit. The account you're trading is actually just your max drawdown or risk. So let's call it like 3,000.
Yeah.
So we trade micros, and it's important to start to size that. Then the style that I teach in the entry methodology is based on the highest probability entries, and it's actually mean reversion, which frustrates a lot of traders, and many traders would prefer to do a trend trading approach, and we have strategies where you can do that. But essentially, I am looking to sell highs and buy lows, which you're always supposed to do, and we do that at various levels. The closer we are to prior sessions highs and lows, the better, or the closer we are to more extreme levels away from VWAP, if we want to talk about like an oscillator or standard deviation band. So if you can imagine, I'm sure many of you have seen these VWAP bands that just put various moving averages around VWAP. We're looking to go short at 2 standard deviations from VWAP and go long at 2 standard deviations away from VWAP on the downside. That's the primary trading strategy, and then it's reinforced by looking at a 30-minute volume profile too, to understand if there's any significant confluence on those other charts.
Yeah, so you're stacking levels effectively too. Yeah, we do the mean reversions. I love, like, one of my huge favorites is a mean reversion trade, because when those go, it's like such a sweet trade to be in on. Love them. Absolutely.
Well, what's great now is this year of 2022, we're getting our highest probability setups, which are buying lows, buying days in which we're either outside value to the downside or below the prior session's low. The probabilities of those trades are much higher than trying to short or fade strength, as I'm sure many of you have seen over the last couple of years, and really since the financial crisis in 2008. You really get your head ripped off. And we're talking about equities because we trade the stock index futures and the micros. So those are always going to have a positive bias to them anyway. So today is a perfect example. I mean, the selling looks like it's pretty much over. We're right back up to the session highs, and every index has put in a very strong V bottom from below prior session's lows, especially the NASDAQ.
Very good. Yeah, nice. So we use similar setups in crude oil. They actually work really nicely, especially if the price opens pretty far away from yesterday's value. So I use yesterday's value for my open sentiment. I think I'm a lot more into Dalton's ideas than I would like to admit, because a lot of my trading is based on some of his teachings, because that's what I was taught at my prop trading company. So yeah, I've combined a lot of it with my statistical ranges and stuff, but effectively it's all very similar to what you guys are doing. You've got the 2 standard deviations from VWAP. I've got the average session ranges and average daily ranges. So if the price opens quite a bit of distance from value, using that as a measure, that's a mean reversion opportunity on most days. I mean, obviously, when you've got some really strong trends, that can be a little bit difficult. Like, for example, yesterday we had a NASDAQ session that took a while to get going, and even then it kind of smashed it back down there. It was like very jumpy, up and down. But again, some of the levels that I actually mentioned in your room yesterday were still reactive. So it's funny how supply and demand works. All right, so we've got some questions.
Okay. Fed minutes took us on a really nice roller coaster yesterday. It was one of the best setups.
Yeah.
And we had a lot of 5-figure days in our room from our traders, so that was great. Not in a room, it was later in the day.
Later in the day, yeah. It took a while. I think on most days when we have the FOMC, whether it's the minutes or the rate decision, it's like a very slow day up until then, because everybody's waiting for that main release, and then it kind of happens, and it's like, wow, okay, great. Now let's do something. Somebody wants to know, Simon Graham wants to know, was the yellow-blue background choice accidental or in support of Ukraine?
Well, as you can tell, I went to UCLA, and UCLA is similar Ukrainian colors, so That if you're referring to the thumbnail that Dee created, I don't know. You can ask her, but yeah, the shirt, I didn't think about it, but
Yeah.
it is definitely in support. In fact, I did a video called Creators for Peace. You can find it on my
Yeah.
YouTube channel, where I was fortunate to donate a good part of the proceeds from the prop program affiliate commissions, and it ended up being quite a bit of money. So that was very nice.
Excellent. That's very
Yeah.
good. I mean, I come from former Yugoslavia, and it's former because we had the civil wars in the 90s, and that was my teenage years. Yay. So every time I
Yeah.
see aggression and wars and stuff, obviously I'm going to support the people that are that are being bombed and yeah. So
Yeah, I've been fortunate to sail Croatia many times,
oh
and
really?
you go to Dubrovnik and stuff. Yeah, flexing a little bit. Hey, if you do well and you learn how to trade futures, you can own Rolexes and sail the island, all that crap,
And
right?
Lambos,
And
Lambos.
I'm a Porsche guy, but anyway, it's just wild when I mean there's still some cafes and stuff in Dubrovnik that have like an old rusted out bomb sitting there, or
Yeah, my best friend Maria. I mean, we went to school together and everything. She's from
yeah.
Dubrovnik, and actually we
Oh, she
met
is.
when she basically escaped, fled the country,
Yeah,
and then they came to stay in Belgrade, where that was my hometown, and that's how we met. So
yeah.
she said that. I mean, Dubrovnik is a little bit weird because they have a lot of earthquakes. So
Mm,
every sort of 100, 200 years, the whole city just gets flattened and it sinks, and then they build
yeah,
a new thing on top. So there are a lot of old buildings in old parts of the city that like it's a beautiful, beautiful place.
yeah.
And I just couldn't believe that how ravaged it was by all the wars and stuff. It was absolutely heartbreaking. People are never the ones who choose wars. It's always the governments that are pushing regular people, and you don't have a choice as a soldier. You can't say, yeah, I'm not doing this.
Yeah.
You just have
Well,
to go, otherwise bad things can happen. So it's
well,
not.
Clinton had a choice and he didn't do shit about it.
Yeah,
So
I know.
we don't want
Yeah,
to turn this into a political discussion,
yeah,
but whatever.
absolutely.
If you don't want to see any of that, you just go to Havar and take
Yeah.
some ecstasy and dance on the rocks.
Yeah, there's island of Pag. I used to when I did head
Yeah,
candy and stuff. We used to do quite a bit of like club gigs there, and there's this
yeah,
massive, massive club in two parts. Like it's absolutely gorgeous, and we did go there, and it was sort of like Ibiza, but in
hmm,
Croatia. Like people just
yeah.
walking off their face completely. Yeah, it was good times. Yeah. All right, let's see whether we got some questions. Somebody's asking what is the win rate. Now, guys, I hate that question for a multitude of reasons, because just because Rod and me can do 60, 70, 80% at times, it doesn't mean anything for you and your skills. To me, it's like it's not a very constructive question. What's it gonna? I don't know. Where do you stand, Rod? When somebody asks you what is your
Yeah,
win
I don't
rate?
refer. I don't refer to win rate. What I do refer to, and I mention this in my room all the time, is I can tell you statistically the probabilities of a lot of the levels, the success of that level. And by success, but here's what's interesting. If I said that 78% of the time, price for 390 minutes during the cash session on the S&P stays within 2 standard deviation of VWAP, that's a true statement.
Yeah,
That doesn't mean that selling a +2 offer zone or buying a bid zone, in other words, selling the high for the day, buying the low, is going to be profitable 78% of the time, because it has all these factors, like maybe it goes out and you get stopped out, maybe all kinds of things. So when it comes to what I talk about, I refer to the probability of the trade
of the
being
setup and the
profitable.
level.
Yeah,
Yeah,
of the
yeah,
setup being profitable, not what the win rate of the
yeah,
strategy is, because that depends on the person pushing the
yeah,
buttons
yeah. And
and all kinds of other
exactly.
factors.
And every time somebody pushes the button, that button push is laced with all of your self-limiting beliefs about money and yourself and your successes or failures. So, just because somebody else can do well on a particular level, it doesn't mean anything for you. I always say trading is a performance discipline. It's like swimming. swimming. So you won't learn how to swim better by looking at Michael Phelps. You have to get in there and try it yourself. That's how you learn. And trading is exactly the same
Yeah.
way.
Yeah, one of the things that I challenge people, especially when they're on trial or they're watching what I'm doing, is that um, I eat my own dog food in the trading room, in the sense that I trade extremely small. You've been in there
Yeah.
before. You see I might have 2 or 3 micros on, and I'll end the day up 80
Mm.
bucks or up 110 bucks or something like that, or very, very small losses, bore people to sleep. But I can tell you this, if you want to talk about win rate or success, if I traded like that on the bunny slopes, I call it about the bunny slopes, I could show you every single day I would never ever
Mm.
lose money. I know that sounds like a crazy statement, but it's not, because I could keep my risks small enough. The other thing that's blasphemy, and was honestly one of the biggest disagreements I used to have with my other trading partner, who I love dearly and is one of the best traders ever, is risk management having to be stop based. And I know that, of course, D, you use
Mm.
stops, you tell people where their stops are. I will trade in front of you. I never have a stop on. I'm a risk manager. I will take a position off or close it, and the question I get asked constantly is, where's your stop? Where's your stop? And I talk about value at risk and VAR, more than we can go
Yeah.
into right now, because there are no portfolio managers. We're traders, right? We have to manage risk on a daily
Yeah.
basis, but there's no portfolio manager who's actually managing hundreds of
Yeah, they
millions or
don't use
billions of
stop
dollars.
losses. Yeah.
They don't have a
Yeah. Yeah.
stop. They
They
have a
can't.
theory
Yeah.
on, and they manage, and they size the position in a way in which they can hold it through all kinds of events that they can't predict. And of course, at some point they make their decision to take profits, and usually they can hold losers for long, long periods of time, because against there's positive drift in the
Mm.
market. So that was a long-winded way of saying I believe in percentages and probabilities of levels and trades. And the better your probability is, the easier risk management is as well.
Absolutely. But you have many, many years of experience, so a lot of people don't have that kind of objectivity to first recognize. Now, not to mention that they all
Yeah.
trade too large. Let's put that aside.
Hmm.
So there's that psychological pressure of seeing a vast portion of your account just fluctuating crazily. That's obviously something that messes with objectivity massively. And by trading small,
Yep.
you don't get that. And obviously the portfolio managers, they trade small positions compared to the size of the actual fund that they have. It's like small positions. They're not going to be freaking out over 10 ticks here and there, 50 ticks here and there. Like, they just don't care. So I totally know where you're coming from, but obviously it takes many, many years to develop the I suppose, mental acuity and the objectivity to just go, okay, that's not working. Let's get out. What usually happens is that people marry the trade and it starts going against them, and they just hold on for dear life, and that's it. That's the
Yeah.
end of it. So yeah.
Well, one of the nice things about the prop programs is they tell you what you're
Yeah.
allowed to do. Now, you can violate that all you
Mm.
want and push the button like a drunk monkey
Yeah.
and reset your account, for as much money as you have. But if you wanted to know some specifics that might help folks, is let me take like a $50,000 Top Step combine, which has $1,000 daily risk. So what I teach is that your max risk is a third of that. That's it, $300 per day. Okay, not 1,000, 300. So the only thing that you have to do, remember, you're playing a video game, right? If you were playing Donkey Kong and the barrel hits you, you die, and if you don't have any lives left, you got to put another quarter in the machine. It's the same thing. You're just playing a video
Yeah.
game. So when I hear this stuff like don't trade your P&L or don't think about, of course trade your P&L. Look at your P&L. Where's your stop on a position when, if you have one contract on and it's $300 against you, it doesn't matter where it's in the market or how close it is or anything, you hit the close button, you're done for the day. I don't mean to oversimplify it, but it really is that simple. So, and if you start to think that way, here's another thing. Let's say you were up $200 earlier in the day, so you have a $200 positive, and now you're campaigning around price. We can talk more about that later. Basically, the smaller you are, the more less binary you have to be. If you trade bigger contracts, or if you trade at levels that are not high probability levels, you got binary decisions all the time. As soon as the market starts to go against you, anytime you think you want to add or something like that, you feel like a loser, because everyone's taught you that that's a losing proposition, where it's actually how professional traders trade, is they campaign around price, and they manage their overall risk. The market doesn't give two craps about what you think your magical risk reward is. It's meaningless to the market, right? Only thing you can control is your sizing and your risk. And if you just hit the button and close everything out when you're down 1/3 of what you're allowed to do, you'll stay in the game for a miraculously long period of time. You'll
Absolutely.
get through the
Yeah.
program and you'll take a withdrawal.
Yeah, absolutely.
If you do it any other way, you will not
Yeah.
succeed.
I'm
Literally.
very big on
If you do it
budgeting.
any other way, I'm just yelling at him. If you do it any other way, you will never take a withdrawal from a prop program.
Yeah, hear that? Yeah, very,
That's a
very
mic drop right
wise,
there.
wise words there. I'm very big on budgeting because I basically teach people not to trade too much. So usually, if you can get 2 good trades in a day as a beginner, somebody who's just getting the grips with profile trading, futures markets, reading the price in real time, trying to position yourself, finding the highest probability trade on the day, then really you shouldn't be doing 30, 40, 100 trades because you won't know what you're doing. You're going to lose your head completely. And if you already had one trade that worked, it went to, I don't know, 2 hours, 3 hours. So you've made 3 times the money that you risked. And then somebody starts to go, oh, I'm going to go into another trade and then into another trade. It's like, are you really trying to trade yourself out of your profits? Just walk away, man.
Yeah.
So this is what I try to teach people as well, that budgeting is important. If you've made your money for the day, just go do something else. You don't have to sit there continuously just looking for trades more and more. It's not that kind of a game. You've made your money, that's it, go enjoy it, right? That's how you take profits.
Yeah.
You don't continue to trade without having enough money in the bank to spend that day. You don't want to give it back.
I mean, yeah, I mean, there's lots of nuance and everything that I think we both agree that these are. You always hear about rules, and I was taught about rules of engagement for a strategy or risk management rules. I like to talk about, as you know, my keyword is situational fluency and understanding that ultimately, pick your favorite sports star. You know that their fundamentals are solid. But what makes them great and brilliant at their sport, whether it's whoever it is, you can take Tom Brady. I'm American, right? So we'll do a Tom Brady reference. You have to develop immense situational fluency to understand how to make those adjustments. So, but as a starting point, budgeting is good. If you've made your money for the day, look at your little sticky note that says this is how I'm going to do it so that you don't drain your emotional capital. But ultimately, where you want to be moving towards is understanding when you are in a flow state and when the market is going to, like, again, I have another 5-figure day here. I've had more 5-figure days in March, February, March, April than, this is going to be a big 5-figure day. I'm long from the lows on all these things, and they just keep going up, and they're frying the shorts now. So you're just seeing, look, the S&P's up 44 points now. So those are days where you just have to earn the right to understand when market conditions are very conductive to what you're doing. But starting with what Deanna's talking about, you got to start somewhere, and you have to develop those skills over time. But ultimately, you want to work towards that situational fluency and flow state, because the profits will take care of themselves. And what so many traders have struggled with is they have no problem with big red days. And they have no problem with stringing together a decent amount of decent green days, but they've never been able to throw a huge up day. Never. I've talked to true pros that have never had a $50,000 day. They've had a lot of $30,000 losing days, but they've never had a $50,000 winning day.
Yeah, we used to see a lot of that in our some of the prop trading firms. You used to get these guys who would they would be like almost like scratch trading, where they would make a lot of cash. Like there was this one guy, sort of like slightly older dude, so he didn't really like people telling him how to do things, even though quite clearly there were much younger people there who were excellent traders, much better than he was. But unfortunately, he had this massive ego. So he used to go through these cycles of making 60K on the day, and then the next day he would lose 120. and every time he would do
well, that's the classic eat like a bird and shit like an elephant, right?
Absolutely.
So that's not That's not helpful.
No,
Yeah.
and I kind of felt sorry for him because he obviously had some talent to find the days where he was making money, but then his ego would be so massive, like he would barely be able to walk through the door from the size of his head that day, and he would be like, "Yeah, man, see, I know what I'm doing," and then the next day he would just go super quiet. You wouldn't hear him at all. He would just be like hiding behind the screens. And the company that I worked for, at the end of the day, they would print out everybody's P&L. It was just like they had to do this mark-to-market thing, and we
Yeah.
knew exactly who was making money and who wasn't. Like you couldn't hide, you couldn't lie to people, and it would be, oh, there we go, yeah, Jim, okay, 120K. No, no.
Our my first manager at Merrill Lynch used to post the he was such a jerk. I mean, this is the 90s, right, when it was all about, producing lots of commissions and gross,
Yeah.
right? You weren't they say they were looking out for clients, but it was just how much production you could do off of your book. Anyway, you get in the elevator, really nice fancy building in Beverly Hills, and we had, it wasn't, the whole building wasn't Merrill Lynch. I mean, we were only the top floor, but in the elevator every morning was all of the gross runs of your commissions from the previous day, so it's sort of the same thing. Like you could just see, and it wasn't fair because I'm there like 1 year or
Yeah.
something, and I'm at the very bottom of the list because there's dudes at the top that have been at Merrill Lynch for like 25 years.
Yeah.
I'm like, I hope John Eby can do more production than I can. So, yeah,
Yeah, prop
yeah, but
world
it makes
is,
you
yeah,
competitive.
definitely. I mean, it was where I worked. It was always like a laddie culture kind of thing, and sometimes it got a little
Hmm.
bit weird. I mean, I was never super girly or anything, so that I was always a tomboy and a nerd. So, I was fine with that kind of culture. But every time we would get girls who would maybe be thinking of going into trading, sometimes the boys would be so obnoxious that the
Yeah,
women would just go. Like they would last a month and they would be like, no, no, like frat boy
yeah, just
culture and all of that. But I came
locker
from a
room.
musician side, which was even worse. So for me that was like a revelation. It's like, hey, we're actually working for a proper company. All right, let's take some
Right.
questions because we have some questions. Um,
Okay.
I think we touched upon this already. What time frame do you look at, Rod, before executing
Yeah.
a trade?
Yeah, so we're not going to share
Yeah,
screens today, but essentially I have two complementary trading strategies. The easiest one to execute off of is called the range trader. It's just a 30-minute bar, like what D had. I believe those are 30-minute candles. So 30-minute candle with volume profile. So I have my VPOC, which is the volume point of control, um, and that's what we use for that strategy. Is essentially we care about 4 to 6 different levels when we start every day. What was the prior session's highs and lows? If we're starting within that, we're not saying starting within value. We're just saying we're trading an inside day.
yeah,
We want to be trading inside days because inside days are the most profitable days for a mean reversion strategy. If you're outside the prior day's range, anything can happen, right?
yeah,
And today is a perfect example. If you have a chart up and you want to look at the Nasdaq, both the Nasdaq and the and the Dow Jones went below yesterday's lows. Buying at the right levels below a prior session's lows, outside day down, is the most profitable trade that we take on the range trader. Now, today is a great day because we reversed super hard. And by the way, when I was mentioning a big day, having a 5-figure day or something, that's not adding a lot of size or
yeah,
risk. That's also a complete bullshit misnomer that you have to put on way more size to put up big days. You have to be big in the right places, right?
yeah.
Or understand how to campaign into winners. Everyone knows how to campaign into losers. So anyway, 30-minute bars for that, and then we also have a Renko bar, which is a modified Renko that, unlike a standard Renko, you can set the trend threshold. So that means a new bar will print every 2 ticks in the same direction as opposed to waiting for a full Renko length of that brick. Renko is Japanese, I think, for brick, right?
Mm-hmm.
So those are the 2 bar types and time frames, and that's about it.
Right. Okay.
On TradingView, we use a 5-minute bar just because the Renkos are not available on TradingView, the ones we use.
So Stephen Barry says, what recommendations do you have for someone who has been trading for a year on and off, but not with a full commitment because they have a full-time job? How do you make time and make the switch?
Well, great question. I think I've answered this differently throughout the years, but at this point, I believe that unless you are able to trade, and this is for my markets, which are the stock index futures, unless you're able to watch those pretty much every day for 45 minutes to an hour from 15 minutes prior to about 45 minutes after, if you do not have a time period for that, it's going to be very, very difficult for stock index futures and micros and what I do. D trades crude and gold, which have slightly different pit sessions,
Yeah.
if you will, or times where they'll do different things. But if your job interferes with that, wherever you are in the world, I've started to say it's just going to be difficult. Like, you shouldn't buy my room or do my stuff. Even if you watch the replays, you could learn a lot of the stuff, but you would not be able to really take advantage of those.
Yeah, but again, let's
levels.
just back up a bit. So you said 45 minutes to an hour. So out of the entire day, if you're not able to find 45 minutes to an hour, like, what kind of full-time job are you doing? So,
but that's it. One specific time, though. So some people, if it happens to be 9:30, in the morning on the East
they
Coast,
will be on.
They might have to.
It depends where you're
their
based.
boss is like,
yeah.
It depends where you're based, and it depends on on what your job is and where you're based.
Yeah, but the good thing is you don't have just equity indices. Like, for example, on crude oil and on gold, gold actually moves during London as well. So if you're really when there's a will, there is a way. That's what I always like to say. So if you're really hell bent on trading something, you could trade gold or DAX for a London session. Wake up earlier. I know that's not ideal, but I have some people like Rod. You're based in LA, aren't you? Yeah, so I have
Vegas and LA.
So one of our coaches is also he's based in California in the Bay Area, and he's actually awake at like 4 a.m., 3 a.m. He's like answering questions in the portal. He wakes up early. It's just what you've got to do. So I guess the question that you need to ask yourself is, how bad do you want it? Is this something that you actually want to make into a side income, support another extra source of income, or is it just like a little bit of fun time to watch the markets and do a couple of trades? So it's really down to exactly what your expectations are. So that's what I would say. Okay, let's take some more questions. Mike says there are traders with 30% win rates that are profitable because of their risk management. Yes, but 30% accuracy, I think I would rather go and stick pins in my eyes, because it's a start.
Your emotional capital, your emotional capital won't.
It's hard.
One of the reasons one of the reasons that I have gravitated, and it took me almost 10 years to get to this point of what I teach and how I do this, is because I've just realized that unless I can show people consistently that that the entry levels and that we can control risk and we can put up a lot of green days, like just today, like I said, not only what happened in the afternoon, but before we close the room every day, I say, put a big G if you're bigger green, put a small G if you're a smaller green, and I want to see a lot of small R's. And we're having trouble even finding small R's, like meaning tiny little red days. People are putting up some consistent things there. So, and I don't think you can do that with something that has a very low. Most people's emotional capital can't handle that, and it depends on your time frames. If you're there's no day trading strategy that I'm aware of, and when I say day trade, I would mean within a 4-hour period that you're trading during the day, not the whole 24-hour period, 23-hour period. I know of none that's 4 hours or less that you can have a 30% win rate and survive.
Yeah, it's so hard. Maybe if you're a swing trader or you're investing in stocks.
Swing trading.
Yeah, because you can hold it. You have the time on your side. Whereas with the intraday, you just don't have the time. We have the time constraint, and you have to expect the price to do something within a very, very tight span. A couple of hours, 3 hours. That's it. If it hasn't made the move, it's not going to be the day. And taking a losing trade and having a 30% accuracy on that, it's not really the best way. So I always say it's a start, because you've stopped losing money, but you really need to push that towards at least 45-50% accuracy if you can. And then if you have, like, obviously we all fluctuate. I have weeks when I have 90% accuracy, but then I have other weeks where I'm not that consistent, or the market is not moving, and it falls down to about 42%. So overall it's profitable, but you're not always going to be smashing it with a high accuracy. But as long as you are aware that you have to have a higher risk reward. Again, the problem with intraday is that you can't have 5R or 10R. It's not going to be something that happens every day, multiple times per day, which is why I always say to people, stay modest with your targets. Don't hold on to the trade forever, because really some of these moves, like Rod mentioned, we have a lot of V-shaped moves. Like there's one happening right now that I can see, and now
in every stock index
yeah,
today,
it's
right
crazy,
now. Yeah.
Absolutely crazy. Let me move my chair because it's easier than moving the charts.
Real quick, the Dow Jones, if you look, went from prior session's low, below prior session's low, to within 9 ticks of prior session's high. Which is only 500 points. It's 450, 500 points, which is still within what we would call 1 ATR. Well, 1 ATR is 481 right now.
Yeah.
But yeah, that's the kind of stuff that's possible.
Yeah, absolutely. I mean, it's crazy. Look at that move. And yet, the initial balance started with a really big down move, and then we had a failed auction that carried on and just shot through, and now we have another V-shaped move down. So,
I would make Deanna put a dollar in our swear jar, because she just used the word crazy or unbelievable. That move is actually neither.
Yeah, I
because
agree.
It's
yeah,
within
true.
I know it's within the expected range. Look at the prior session's low, the prior session high. It's exactly what math would tell you. It just turns out to be the absolute perfect day that you could buy the low and sell the high.
Actually, if we go back, because my little indicator, so you can see, so this is the average session rate. So what I'm doing here, I've just kicked off the Blahtech time machine, as I like to call it. Obviously I'm streaming as well, so it's a little bit slower than usual, but basically this is the initial balance, and if you see, there's these like little lines that are about to turn into dots. So that's your statistical daily range for the low for the day, and that's exactly where it turned around, and then it kind of went shooting up, and actually it overshot a little bit, but still, like, it's literally within within a few ticks.
Yeah, 34,609 is
very
the
powerful,
prior session's
very
high.
Powerful. Yeah, so if you know how to look at those levels, that's your mean reversion. It's like classic, but it's not even a mean reversion, because it's like within the statistical norms. So I wouldn't really.
It's within the statistical norms, and perfect setup, because the outside day down, when it got below prior session's lows, and by the way, VPOC is on the lowest part of the range today too. 34,184 is my VPOC, volume point of control. It's sitting right on the prior session's lows. So those days have the highest probability of a reversal. Who remembers the unfortunate day that the bomb started to fly, right? You're always supposed to buy on those days. So February 24th, I was in Las Vegas giving a conference, and we had one of the biggest reversals in the NASDAQ in history, almost 7.1% from low to high in the NASDAQ futures. And it was the same thing. We had started with a big down day. We had outside day down, and outside day downs in upwardly trending markets are great buying opportunities.
So let's see some more questions. Stephanie wants to know, do either of you factor in chart patterns or strictly price action? Well, again, we spoke about this earlier, so it's kind of like chart patterns for me, they're a bit like ink stains, but price action patterns is the same thing if you're not looking at them at relevant levels. So price patterns is just a means to an entry. It's not going to be me entering a trade just because there's a bullish engulfing. There's got to be something else going on. Like, for example, on this chart that I'm showing now, you've had this kind of like a morning star reversal, if you want to call it that, and it happened where it happened at the average daily range low. So it's not the pattern that would have made me go into a trade, it's the fact that there's something statistically happening where I want to see a reversal. That reversal comes, that's what I'm going to trade. But it's not the pattern that's forcing you into a trade, it's the fact that the pattern is at the level. Yep. So I would say I don't really use chart patterns. Like, I'm not going to say cup and handle and stuff, head and shoulders. That's like, I don't do that. I don't know, Rod, have you used
No,
those
I
before?
don't at all. In fact,
No.
I don't even understand what price. I know what people mean when they say price action, but I only talk about levels.
Yeah.
That's
Yeah.
it. It's levels and campaigning around levels. The
You
four things
you
that
do use price patterns though. I've seen it in your course. You do have some reversals and
we have in the course for sure.
mm,
We get into visual price patterns associated
yeah.
with brick wicks and other things, but they're not really ones that that we use for necessarily for entry sometimes. But yes, I mean there are visual price patterns. We're playing a visual game when
Yeah.
we're rules-based
Yeah,
discretionary
absolutely.
traders. Yeah,
Yeah.
yeah,
But chart patterns to me literally like king stains. You might as well go, yes, dragon crapping under a tree. I couldn't care
right.
less. Okay, so we've got some more questions. Mm, mm, mm.
One last thing I want to just add about
Yeah.
levels, because that you can throw out this level, and people will draw fibs on a chart, and they're, it's all discretionary. They're starting from a certain swing high or certain swing low, and they have their fibs extensions and things. And everything works and everything does. There's nothing wrong
Yeah,
with
exactly.
Fibonacci. But when I talk about a level, it's on my chart based on price only. So there's maybe price action. It's a prior session high or low.
Mm-hmm.
It's a developing or set uh, value area high or low based on a VPOC that's not going to change. It's math. It's done. The level's drawn there. I don't have to draw it in. I don't draw support and resistance lines. I don't draw trend lines. I don't do any of that. Levels are levels that are done only by price. So that piece of price action
Yeah,
is
exactly.
valid.
So that is price action. See, that's how
Yeah.
I kind of define price action because I also use profile. I also use value high, value low, but I also use levels where it's quite clear that the move came from there. It's very relevant to see where the inventory was held by institutions at some point, whether that's on the daily chart or something even larger or slightly smaller. That's an entirely different different thing. But basically, distribution theory, distribution curves, they work. It's math, So the further you are away from a distribution curve, the more likely that you're going to get some kind of a return to the mean first before the price kind of carries on. So that's kind of what we say when trade the levels, don't trade the patterns. All right, we've got somebody asking, I'm not sure I like that question. How certain are you that we've seen the lows this year? I'm not psychic. I can just, again, tell you the probabilities. I don't have a crystal ball. I can see exactly what you see. And, I can't tell you whether we've seen the lows or not. So we're going to skip past that.
Well, one thing that I can say on that manner though is we have the average true range volatility is coming down, not as measured by VIX, which is a meaningless thing. You can't trade that really.
No.
But if you look at what I talk about is we take the NASDAQ for example, really quick. The NASDAQ NQ 7-day average true range right now is about 370 points. It got as high as 590 points, almost double where it's at. So as ATRs come in, then the probability of a low holding increases. Just probability. That's
right.
it. So
yeah.
you
But
can
again,
do these
it's
things
probability.
mathematically.
Yeah.
It's probability.
But have we seen the lows? We don't know. So to me, actually looking at the daily chart, Nasdaq is in a little bit, quite a bit high in the overall swing. So I would say it still has legs to go down. Just again, probability-wise, I've seen things happen like that, and just from a risk-reward point of view, whoever's looking at buying the index, they're not going to be buying here. So anyone with deeper pockets would want to see a little bit more correction, I think. But yeah, so we don't have a crystal ball or anything like that. So yeah, let's move on.
And you don't get a lot of time to do either one, to sell the highs or buy the lows. That's an adage that's been around forever, and it's more true now than ever before, because price indices do not consolidate. They don't hang around any price for very long. Markets are just too quick.
Absolutely, yeah. And again, another one. Do you think there's a market crash coming soon? I think we've seen some market crash. Everybody's always talking about market crashes, aren't they? They're like, oh, is the market going to crash this year? So it's like the market has been going up for, since I've started trading in 2008. The market has been going up since then. So no, I don't think there's a crash coming. Is there a correction coming? Yeah, did we have a crash? Well, we had a crash for coronavirus, didn't we? But then it really recovered lightning fast. And here we are again. It's like, so no, I don't think the market's going to crash. Rod, do you think the market's going to crash?
I always start out by saying that's the beauty of being an intraday futures
Yeah,
trader
we don't care.
for daily income. I don't care. The
Yeah.
only thing I want to never happen to the futures markets, which I don't think will, is what's happened to Forex, where the daily ranges on the euro just go to shit and they're
Yeah.
untradeable. I mean, Forex is a terrible instrument anyway, but
I made a
um,
video on that recently,
yeah,
actually.
yeah.
Yeah.
So do I believe that we are going to see hyper movements for the rest of time in our indices? Yeah, and that's an amazing opportunity. I
Yeah.
don't care which direction.
Yeah, exactly. Yeah, like Rod says, it's the beauty of trading intraday. We don't hold trades past, like, what's your average trade duration, actually? Because mine is about 45 minutes. So how long are your trades usually?
It's situational.
Yeah?
So if we have and I'm only gonna the time frame that I have in my trade room is only 90 minutes.
Mm.
So I only base everything I ever show on what's done during that time frame. So during those 90 minutes, I would say that most of the trades were in them for 10 to 15 minutes,
Yeah.
something like that.
Mm.
But we can definitely go into the S word, scalp, which is a bad word for a lot of people. I just call it tight target trading, or adjusting to what the market is giving us, as opposed to looking for.
Yeah, and Rod also trades a lot of equities, and you also trade bonds, and you trade T-notes.
Yeah.
Those are when they move so quick. And
yeah, moved
yeah,
great
surprisingly.
day to day in the bonds.
Yeah,
The ZB again
I had a look, yeah.
Yeah.
Yeah, it's crazy. It always happens around monetary policies releases. It's very lucrative. I'm not really a fixed income trader. I've never been a fixed income trader. So I've worked on equities desks, and I have worked on commodities desks. But to me, commodities is definitely my biggest strength. So yeah. And you guys know that I trade equity indices as well, but I have like a love-hate relationship with them. They're very fast, very fast, but I'm kind of one of those people who, I suppose I would define myself as an intraday swing trader. I like my, good chunk of the move to happen before I take my profits. All right, let's carry on. Somebody wants to know what software I use for charting. For charting, I use MetaTrader 5 from AMP Futures. So wherever you have your live account, that's fine. But for charting, we use MT5 from AMP because it's free. You have real-time futures on a demo. So, you don't need to pay anyone anything. Diego Gutierrez wants to know, in your strategy, do you trade multiple contracts and have a runner? And if you do, how do you decide to close a runner? How far do you let it run? Okay, so Rod, do you want to answer this one?
Yeah, so yes, so for sure, everything that I do personally and everything I teach and train on, if you use the micros and you have the right size, then we will often have multiple contracts where we will campaign around price. In my trade room, as small as this might sound, I enter every original order with only a single contract. Occasionally, I will change that depending on if we have confluence. So single contracts, and then campaign around price. So like Warren Buffett, who honestly likes things to go down after he takes a big position. I'm sure he wasn't, they weren't happy that HP went up 25% today because they own it. I'm sure they would like it to come back down so they can buy even more of it. So yes, we'll have multiple contracts on. The way we get to those contracts will differ depending on market conditions. Now, in terms of the runner, it's the easiest thing. We've tested both trail stops based on volatility, but what works a lot better is just the next logical level. Meaning, if you still have a contract on and you're long from one level, then you're out at the next logical level on the upside, or the reverse if you're short. You don't have to so that way you don't have to think about it. So if you think about these volatility bands that I've been talking about, imagine like a Kalmar or some sort of volatility band. A Bollinger Band is the easiest one to think of. Think about these Bollinger Bands when you hit the top part of that Bollinger Band and you're long, that's your level. That's where you're out. There's nothing else to think about.
Yeah, so again, it's all about the levels. I mean, for
Yeah.
me, I will take my 2 or 3R wherever it is. I don't necessarily have to go like do or die to the next level. As long as I get my 2R, I'm a little bit simple like that. But sometimes if I have like a mean reversion trade and I can see that there's definitely lots of leg room to keep going to value without any major congestion areas on the way, then I will definitely keep it, and that's how I will get my 4 and 5 hours every so often. But again, those are very specific days. That's not something that you're going to get every day. You know, runners, again, it's the time constraint. So if you don't get a runner within, like say I use, I have a trade duration on average that's about 45 minutes. So if I don't get that runner in 45 minutes, I'm not going to sit there waiting for it to happen forever and ever and ever. It's going to be it. Like my trade is done. If I already know at this point, once the trade is in, and how far it got to, whether it's going to be a successful trade or not. So for me, if I see that something's moving faster than usual, I might stay in. But if I see that, you know, it's kind of going normally, then obviously I'm not going to extend that time endlessly just for the sake of getting, you know, a 1R or 2R extra. So hopefully you get something
Right. So
out of that.
the other last point I would make on this is spend infinitely less time being concerned with how you manage profitable trades and far more concerned with how you manage risk in unprofitable trades.
Yeah, profits generally take care. Like if
Profits will
it's going
generally take care of
in
themselves.
your direction, it's gonna get there. It doesn't matter what you use.
So the most common thread in the chat in a lot of trade rooms, including mine, is, yeah, I was in that position, but I got out too early and I screwed it up. And then when it's a winner, right? And I'll never hear things like, man, I managed that unprofitable trade really well. I'm very pleased with how I
everyone's always
managed.
moaning about how much money they left on the table, but nobody's
Yeah,
saying, hey, I actually cut that before it really smashed through my stop loss or
correct.
whatever, yeah? So yeah,
Yeah.
you have to almost be a contrarian. So instead of everybody going, hey, how much money did you make? You actually have to say to yourself, well, how much money am I prepared to lose today? But I don't like winners and losers. It kind of has this like gambling connotation. So what I use is expense and income. So you have, you know, cost of sales, and cost of sales, every so often you have to lose a trade. It's just how it is. Whether you cut it early or it doesn't go your way or whatever, you have to take that as cost of sales. You know, you will get hit every so often. But then there's the budgeting side as well. So if you're up on the day, try not to, like if you already lose another trade after that and you're down half the amount, you probably shouldn't carry on trading because you're not reading the market very well. And again, Rod has, you have even stricter ways of doing that. So you said if you lose a third of your profit, you're done. I actually say to people half from the high mark.
Yeah. No, I just talk about no profit. Like if you weren't in profit at all, if you're down a third of your available risk for the day, then you're definitely done.
Oh yeah, absolutely. Yeah, I usually say to people, if you can't get in on a profitable trade in 2 attempts, you're done. And again, I also say to people, trade small. Don't go using 2, 3, 4. Like some people come to me, or they're like, I'm doing a prop trading challenge, and I said, okay, how many contracts are you trading? And they go, oh, I'm comfortable trading 3. And I'm like, wow, you can do so much damage with that. That's like crazy. And they don't see it that way. They're like, well, yeah. And then it's all about, hey, I made 1.8K. And I'm like, okay, but how much drawdown did you have the previous days and the day before, like when it didn't work? That's what I want to know. I don't care how much money you made when the day was going well. I want to know how much, you know, in the gutter you went before you made the 1.8K. But again, be a contrarian. Don't ask yourself how much money I can make. Just ask yourself how much money can I afford to lose. And then you'll have something.
And I know that people hear that a lot. They don't necessarily embrace it, you know.
But you have to.
I scratch when I'm not in my room and I'm trading more aggressively and doing other things, multi-market. I scratch trades all the time. That whole thing of that everyone's heard, let your winners run and cut your losses. Well, how do people actually do that? I'll tell you how you do this, right?
Mm-hmm.
If you get into a position, it's a binary event. It's either going to go up or down in some period of time.
Mm-hmm.
If it happens to immediately go against you, you can raise your hand or put a 1 in the chat. I don't see the chat here, where we don't know why this is, but trades that are going to go poorly or be unprofitable tend to do so profoundly and quickly. That's just my experience because
It
I'm at
is,
key
yeah.
levels, right?
Yeah.
And ones that are going to work would do the same thing in the opposite. So if you know that, if it begins to go against you, look immediately for a quick exit. If it comes back to entry, we call that a graceful exit. Just scratch trades. Now you can't get jittery with winners, so that's how you put that into place. If you want to know how to let winners run, be patient with a trade that's immediately profitable. Be completely impatient with a trade that's immediately unprofitable. That doesn't work for everything, and it depends on your strategy and where you're at in the market. Like if you're only doing 2 trades a day, or you have a trade plan like Deanna talks about, that will drive you crazy because you do need to let things develop a little
Yeah.
bit. But if you're trading a little bit more actively, or you're at a key level, just think about scratch more trades. I'm going to get a shirt made. Scratch more trades.
Scratch more trades. Yeah, somebody actually put that in the room, so I think you've got some of your peeps in here.
Yeah.
So there's actually a question that might tie into this quite nicely. Somebody says, "Sorry, came in late. What is Rod's take on risk reward? Sometimes it seems his average win is less than some of his losses."
My take on risk reward.
Yeah, like risk
Well, I don't know
reward
exactly how
ratio.
to answer that. I don't
Yeah.
do any risk reward analysis. I don't use any um, bracket orders or things like that where I have a stop in some particular place. So it's not. My average win is slightly higher than my average loss across the stuff that we do in the
Across
room.
everything, yeah.
Across, yes, across everything. By the way, if you're unaware, right at 10 till 4 o'clock Eastern Standard Time is when the closing imbalances come in. So if you've ever wondered why the market blips around and does this weird thing right at 12:50 or 3:50 p.m., you should be aware of things like that. So that's all I can say on that. I campaign around price, and sometimes it takes a while to work a trade back to a reasonable loss or back into profit. I'm not always trying to do that.
And you're averaging in as well, so it's not like
Yeah, I'm
because of the
averaging in, yeah.
campaigning around price. Yeah, okay, so
Yeah.
that's why it's it's not necessarily because I keep things very clean and simple to make people aware of risk reward ratio, because a lot of people go wrong. They will have a lot of like you have to understand Rod has been trading for a long time, right? So he's gonna have some advanced techniques that definitely work for him, but it doesn't mean that you as a beginner will be successful doing the same, right? So you have to keep it a little bit simple when it comes to risk reward. So if you're still not sure about the levels, if you're still missing opportunities, and you're kind of looking at a level, but the level comes and it starts to turn around and you just don't go in, that's not really the level's fault. That's execution. What's that? It's the problem between the keyboard and chair. It's that old thing in software, yeah. So you have to differentiate between real risk reward on the level and what it can actually give you statistically. It all comes back to that, and what you've actually done with that level as a manual trader. And it's not the same. So again, looking at Rod's risk reward and how he does things, I just don't think that's going to be particularly helpful for others. That's just my take on it.
Yeah, that's going to be till the end of time. The idea of we get called gurus, or people are skeptical about why we teach and trade and offer products and sell things, and I get it all to the end of time. I mean,
Same, yeah.
I've just comfortable in my own skin now. I record every single session, so even someone saying that they see bigger losses or whatever, every single session is recorded. You can see them. You can see them all.
Yeah,
I
exactly.
only show. I trade ridiculously small in the room now. So things, if you haven't been around for a while, things have changed, because even 3 years ago when I rebooted this, I was still trading some minis and some bigger size that you can have days that look, obviously look pretty brutal. And unfortunately, there's still a lot of folks in the futures world. One who's very popular on YouTube that's trading pretty big. He's got a big audience. He watches it. I just think it's detrimental to most people. To see that kind of stuff. see
Yeah.
that kind of stuff. So
See, one of the
yeah.
reasons why I'm not too keen on showing all of my trades, because I have a pretty, sizable personal account,
Mhm.
but I just don't want to give people the like I've been doing this for 14 years. I didn't start yesterday, and when you compare somebody's chapter 20 to somebody's chapter 1, it's not really equal. It's not equal. So, somebody thinking just because I can trade, I don't know, 20, 30, 40 contracts of crude oil, full contract, it doesn't mean it. Oh, again, on Instagram, somebody asked me, are there any private traders? I think people are just obsessed with private traders trading large. Somebody said, do you know of any private traders who trade 1,000 contracts and they just trade for themselves? And I'm like, well, if you're trading 1,000 contracts of like full contracts, futures, the SEC is going to come knocking on your door because you're going to start having an effect on the markets. And whoever you are, they're going to be at your door and going, what the hell's going on? And it happened
Yeah.
to a guy in London, actually, in North London. He put like a trade on, there was like 40 million in underlying value. And they came after him because he affected the market. And he was just like, in his house, obviously doing well, but in his house. And he actually got a ludicrous fine from FCA, and he can't actually trade anymore. So, it's just not realistic to expect that. So this is why I always say trading is a very, very active source of income. People think, oh yeah, it's just trading, but you have to be there to trade. And one of the reasons why I have like a dozen businesses is because I know that something can happen to me. I can lose my eyes. Like a while back, I actually had brain injury. Just bizarrely, I was sitting on a bus, the tube wasn't working, and I actually had a huge knock on the head. So I never want to be in that position where I can't trade and I don't have other things to fall back on. So that's my reason for having like loads of businesses. And I always say to people, don't just limit yourself, whatever it is, whether it's trading, whether it's working for somebody else, whether it's having one business, don't just have one thing. Have several things on the go, and it takes time to develop that. But trust me, it's so much easier to get wealthy when you've got multiple sources of income. So I don't know why people are so obsessed with that. Somebody wants to know, D, what's your average stop size in points in crude oil or gold? Well, usually in both, it used to be 30 to 35 ticks, sometimes 20, 25 if I can really find a way to optimize the stop loss. But these days, because crude oil is so massive, I do go up to about 50, 60 ticks sometimes, but I still try to find lower opportunities, obviously. So this is why I've been trading a lot more on gold than on crude oil, because I find I just don't want to be in trades where I know I'm right on the level, but I get knocked out because, the stop loss might not be wide enough. But yeah, on average, if you take the last, 8 years of my trading, my average stop loss size would be around 35 ticks. And Rod, you don't use stop losses, so
No, we don't really.
no.
We don't use stop losses. So ours is value at risk. So
Yeah,
what
value
is your
risk.
P&L relative to when the the barrel hits you and the
Yeah, so
monkey gets you out of the game?
I'm just gonna say value at risk is more kind of like the traditional way of how you invest in stocks. You effectively size your risk by the size of the entire account, if that makes sense.
And
It's like a very simple way
right,
to.
that's what it is, by the
Yeah.
size of the entire account. But I'm
Yeah.
doing a version of it for day trading, which is I'm valuing it based on the amount of risk, not the
Yeah.
size of my account,
Yeah,
not
yeah.
what
The
a
size of whatever
1%
that they're
position is.
giving you.
Yeah,
Yeah.
yeah, exactly. Whatever
Yeah.
I get.
Yeah.
There's a real quick, folks, if you want to Google Netto number. John Netto is a friend of mine. Many of you guys might know John Netto is one of the most brilliant futures traders out there. He has a thing called a Netto number, which is a really much better than a Sharpe or a Kalmar ratio to measure risk, because what it does is it basically says how well are you performing within a risk budget that you're allowed to trade within. Okay, so Sharpe and Kalmar don't account for any of that. They use this riskless rate of return. So we're getting into some portfolio theory stuff here, but just Google the Netto number, and it's a really great formula because all that matters is if you have chips at the table and you're still at the game. You can be the greatest whatever trader. If you run out of money or you're not successful in these prop programs, whatever the case may be, it doesn't matter, right?
Yeah.
You have to be performing within the parameters that are given to you.
Yeah. All right. So there was a question here. Let me just see. There's a question about back tests. Hold on. Yeah. So Rod, this one's for you. How long do you think it takes back? How long do you think to? How long do you think it takes? Christ, to back test a strategy, or must you trade straight away to get the feel of the market and the strategy you use?
Wow, that's a great question, and we could go on for this forever. So I spent 15 years working with developers or doing easy language myself, mostly on
just one
TradeStation.
question. Somebody's saying, how do you spell netto number?
It's Netto, Netto, John Netto. You can look him up. If you start to type into Google, speaking of, it'll say, you'll type in John Netto, and then the next thing will be net worth, or how much money does he have, because that's the way people think.
Right.
But anyway, John Netto.
Yeah,
John Netto. Yeah, Netto, John Netto. He lives in Las Vegas here, and he's just a super good guy. You can meet him if you ever come to one of the trading shows or something like that. And he's featured in the latest Market Wizards book. So if you want legitimacy, he's in the Jack Swagger latest Market Maker book. Okay. Nice. And you want to talk about a journey and a story. He started as a bookie at like 13 years old making markets. That's, anyhow, backtesting. We could talk a lot about it, but the short answer to your question is I now believe the faster you can just walk forward test a theory, meaning get it on a demo. If you have the skill set to code it up, that's great, but just put it in a live market, demo live market, and walk forward it. Backtesting is such a tricky thing. The only thing it's good for is really just finding potential candidates that you want to walk forward test, and everything else I've really changed my tune on this whole idea.
I mean, I've never seen a bad backtest. We do a lot of algorithmic trading ourselves here, especially with my Blahtech technology team, and it's like backtest is such a can of worms because you can so easily over optimize it and think that you've got something really great going. Which is why nowadays, because I started like you as well, I kind of had an idea, we tried coding it, it failed spectacularly, and then back to the drawing board. So I flipped it. I just basically used the levels that I know worked for me as a manual trader. So we almost kind of did it in reverse, and it worked. It totally worked. So again, the forward testing is invaluable in my eyes. But also you can do, if you must do back testing, try doing out of sample data.
Right, yeah.
I don't know whether you guys know what out of sample is. I don't know how many of you are in algorithmic trading, but it's basically when you take a good back test and then you run it live for about a period of time, usually I like to do it for 3 months, to see how that performs in the live markets. And then you compare that data to your back test, and if you have something that is similar, then you've got something. But otherwise, like Rod says, forward testing is the way.
Yeah, and the challenge with all of that is you constantly have to, even if you find an amazing candidate and you walk forward in testing and it's working out and things are great, you're still going to have to recalibrate it and do all kinds of things. So that's why the skill set you want to work on is situational fluency and understanding market dynamics and context, because one of the most powerful things that will give you is even understanding when you should even run a particular model. Like I have literally thousands. I have 600 templates that run just on Shark Indicators, which is Bloodhound, a product on Ninja. I don't run many of them anymore, but I could look at a market and know which club, which of these models would work even to turn on. Right, so that's something you can never program into the computer.
Yeah,
maybe I'm sure
there's a thing.
There's AI that does it.
Yeah. we actually license a few of our indicators to other companies and algorithms to other companies. And one of the things that they do, and one of the things that they make quite apparent, is that they're not taking your algorithm and just running it all the time. They have a guy called the quant strategist who basically switches things on and off based on the market conditions and basically their best judgment. So whoever is trying to sell you something that's like, buy my EA or robot and you're gonna make money, just run for the hills, man. It's just such a lie. You have to have enough knowledge to know when that strategy is going to be working. I have probably about 27 algorithms at this point. Do you think I run all of them throughout the year on all of the products? Of course not. I know exactly the time of the year when gold is going to do the momentums, and I also know when to switch off the momentum based strategies and just have the range bound ones, usually summertime. So it's so important. That's what Rod calls situational fluency, to understand when the markets are going to be moving and why and how.
Yep.
All right, so let's take another question, and then we're going to be
Yeah, I think
wrapping
that's
this
a
up.
good run. Yeah.
Yeah, I think so. Trading is a hard way to make an easy living.
That's true.
I like that.
They say that about poker too.
Yeah.
Yeah.
Okay. So somebody wants to know, John Netto, did he write the book One Good Kill?
He did,
He
and
did.
he also wrote a book that's like weighs 150 pounds called The Global Macro Trader. Yes, that's him.
Yeah.
He was in the Marines. He's just a
Wow.
good dude. So
There's a lot of
and
ex-Marines that are
yeah,
excellent traders.
he was a Marine, and he donates a lot of the, I think all the proceeds from his books are donated to canine, which I love because I love dogs. So
Same.
canine efforts that help where they place dogs with wounded vets.
Oh, that's amazing.
Yeah,
Oh,
yeah.
wow. All right, so one last question. Hey, Dee and Rod, good to see you both together. I'm just starting out with funding evaluations. What time frame and practical risk per contract on ES/NQ would you recommend starting out?
Well, let's start with the first part. It doesn't matter which program you're doing, unless it's like literally the 250 or 300,000 from Lilu or Apex. You can't trade any ES or NQ, so start there.
Yeah, so
You're
micros.
you're going to trade micros because remember, the size of your account is the max drawdown or risk that they provide. So think in terms of that. So you're really trading an account that's somewhere between $1,000 and $3,000. So start with micros, and then instead of risk per contract or per trade, just like I said, just take the max daily loss that you're allowed to take. If it's a trailing threshold or drawdown, you need to adjust it a little bit, and you can't risk more than a third of that per day.
Yeah.
So if it's $1,000, you can't. Let's take the TCP one from Earn to Trade. It's 25,000 in the first step. It's a $550 daily
Loss limit. Yeah.
So if I was telling you, you really can't risk more than about $175.
Yep.
So think about it that way. It's whatever that is. If you enter 5 micros, you know that $175 is only 5 points, right?
Yep. Yeah. So all good points.
think of it
Somebody's
that way.
saying shout out to Dodger.
All right, yeah, D-Dog. He's doing good. Thank you.
Oh, that's
Yeah,
good.
he's right here.
That's good.
Yeah, he had some surgery.
Oh no. Oh, hope he's all right. Okay, so we're gonna wind this up. I think we might have lost Rod as well. Okay, so guys, thank you so much for being a part of this live stream. Hopefully you got some very valuable insights and some ideas on how to manage risk while you're doing prop funding evaluations and a whole bunch of other things. So yeah, let's do this again next Thursday. Oh, you're back.
Sure.
Yeah, I think we lost you a little bit.
Yeah, I was back I lost for a second. Yeah, maybe next time we can get a little practical and go right into some charts, do some trading if you want.
Yeah, absolutely. So next time it's going to be like more of what I usually do, like, trading, Q&A, trading setups, and then talking through them. Today I just kind of wanted to do this as more like an interview so that we can, because nobody's really properly interviewed you yet, and I think you've got a lot to say. So I figured I'm going to do it. So yeah, so next time we're going to be ready with some screen shares and stuff. So Rod, thank you so much for joining us. And guys, let's do this all over again next week.
Thank you, everybody. Have a great rest of your evening. Take care. Bye-bye.
Thanks, guys.